Alright, so today I'm going to be going over this trade I took on the E-mini S&P 500 futures. This was a 6-point gain with a 1-point stop loss in case it didn't go in my direction. 1-6 RR. I love that risk to reward ratio because I could lose 5 trades in a row but have one good win and still come out profitable. Right now I am just marking out the direction I see the market going in. For my bullish bias, there you have the break and retest and run up to that bearish trend line. And then for that bearish bias, you have that liquidation down to the POI at 6747. Alright, here's when I noticed a large amount of passive buyers sitting at that 6747 zone. This is when I created my trading plan for the day. So if the market goes back down to that zone, or POI, I am looking to play longs up to that supply zone. Essentially, where there's pain, there is gain. So since we see those passive buyers waiting there, we can expect a lot of traders to not see that and play shorts, believing that the market is going to go down. But once the market starts going back up and liquidating their stop losses, that's when we gain, and that's when we take profits. So here's when the market actually reaches that point and I place my trade. This was a fairly quick trade for 6 points. It was about no more than 2 minutes. I had to be very quick there to get a good entry with my 1-point stop losses. The entries that I make are extremely important. And here I just watch the market liquidate all of those passive buyers and the stop losses of those sellers. There we have it. There's not much red there, as you can see. They're liquidated. A very, very quick and solid trade. Alright, for accountability, I'm going to show my monthly performances for the Top Step Combine. What I love about this month is, look, one winning trade got me about $300. However, look at these losing days. I lost 9 trades, I lost 3 trades. Those are only a little over $300 lost each. That goes to show how important risk management is. That 1-6 RR that I use. A few winning trades could cover a handful of losses easily. A big loss should not be in your vocab. February, I didn't even trade once. And then, yeah, this month was horrible. I believe that I was starting the combine. No risk management. No risk to reward ratio. It's all over the place. Not even the losses or the wins are consistent. But you have to go through these horrible months to have good months. There's no going around it. You need to learn from these types of mistakes. I do plan on being more consistent from here on out. I can't wait to see what the rest of March has to offer for me. But yes, let's see how tomorrow goes. Alright, lastly, what I'm going to do is add this trade into my playbook just so I can keep track of what wins me profits. I have not yet updated it, so that's definitely something that I'm going to start doing. And yep, this trade was a break and retest and another retest. It retested twice, which is great confluence. And there, right up into the supply zone where I took my 6-point profit. And here it is updated into the playbook. Click on that. Convictions, which should be confluences, I'll change that. You have supply zone liquidation and fair value gap. And not yet break and retest trade. Alright, so the fair value gap is right over here, aka an imbalance of buyers or sellers. With this being a bullish FVG, that means the buyers were way more aggressive than the sellers. And this right here is just another amazing trade I could have taken. It's another break and retest, but from a bearish standpoint. It breaks past that 6747 POI, retest it from the other side, and you see that continuation on down. This is a textbook example of break and retest for bullish and bearish. But yeah, that's gonna wrap it up. Let's see what tomorrow brings.